Hi, I'm Jimmy. In this video, we're looking at the growth stocks that are going to make up our growth portfolio from our Dow 30 analysis. Now, if you're new to this channel, well, we've been doing an analysis that we're calling the Dow 30 analysis, where we analyze all 30 companies in the Dow Jones Industrial Average. We then take that analysis and we're building three different portfolios: a value, a dividend, and a growth portfolio. This is the growth portfolio. We already did the value and the dividend portfolio. So my goal here is to pick companies that are growing relatively quickly, or we expect them to grow relatively well over the next few years, and they could make up good long-term investments. Now, because this is part of the Dow 30 series, well, we're sticking with companies that are in the Dow Jones Industrial Average. And that's somewhat tricky because these are very large blue chip companies that have been around for a long time. So it's going to leave out key growers like Facebook or Google that would easily make this list if we were not restricting ourselves to the Dow 30 companies. Okay, our first sector is the financial sector. Now, we actually have four different companies from the financial sector. First, let's look at both American Express and Visa. This is a chart of American Express's earnings going back the past couple of years. And as we can see, it's been moving higher at a decent pace. When we switch over to Visa, well, Visa's been doing even better than American Express. Now, personally, I think that these two companies are great additions to a growth portfolio because they're likely to remain very important in the economy as technology pushes things forward. Even services like Venmo or Apple Pay or Samsung Pay, whatever it might be, as they pick up ground, they're not leaving Visa and American Express behind. They're simply incorporating those services into their own business. So I believe that Visa and American Express, companies like that, are gaining more ground and gaining more importance. So I expect them to grow nicely in the coming years. Then we have the Travelers companies. Now, Travelers, I'm not actually using earnings per share. I'm using revenue because I think this better illustrates their growth potential and their growth over the past few years, since earnings per share for insurance companies can be a bit deceptive. So on the revenue chart, we can see that Travelers is expected to pick up a decent amount of ground. We could see that with the green bars. Green bars are analyst estimates. So I think that this is likely to be a good thing for Travelers stock as they continue to grow. Then we have the last company in the financial sector, and this is Goldman Sachs. Once again, I used a different financial measure other than earnings per share. This is the last time I'm doing. Everything else going forward will be earnings per share. Here, I use book value per share. And I did this because if you remember the Goldman Sachs video, well, price to book value is a very popular way to try to value a financial stock like Goldman Sachs or Morgan Stanley or a company like that. So as we can see there, book value per share has grown nicely. And although we don't have estimates for book value, I believe that book value per share for Goldman will continue to do quite well in the coming years. Okay, next up, we have the information technology sector. Here we have two companies. The first one is Apple. Now, obviously, Apple's a solid company, and they're a good fit for most growth portfolios. And as we can see, Apple's earnings per share is growing and expected to continue to grow in the next few years. Apple is pushing to expand their current content offerings, and this seems like a smart move going forward. Plus, they always have their great products like their iPhones, iPads, things along those lines. So overall, I expect as they continue to expand their content offerings, Apple's earnings per share and likely their stock price will continue to grow. Okay, now right in line with this, our next company is Microsoft. And as we can see, Microsoft has started to pick up their earnings per share over the past few years. And we expect, according to the green bars, which is analyst estimates, that they're going to continue to grow in the coming years. I think Microsoft is one of the stronger companies out there, and I think that this makes a good addition to most growth portfolios. Okay, now we slide over to the healthcare sector where we got two companies. The first one is Johnson & Johnson. Now, Johnson & Johnson's growth, their earnings per share growth, was a bit stale a few years ago leading up to about 2015, and the growth really started to pick up. And as we can see by analyst estimates, well, growth is expected to continue to grow for the next few years. So I think that this will make a good addition to the growth portfolio. Plus, Johnson & Johnson is somewhat a defensive company. So I think that that's a nice thing we should incorporate since we've been on a bull run for so long. It's probably good to have some defensive names in here. Okay, next up we have United Health, which is another defensive holding for our growth portfolio. And as we can see in their earnings per share chart, Well, just like Johnson & Johnson, they've begun to pick up speed recently, and analyst estimates have their earnings per share continuing to grow, which should make them a good addition to the growth portfolio. Plus, like I said with J&J, they're a defensive name. They should be a defensive name. So in the event of a market pullback, I think we would be happy that we added these two companies. Okay, now we move over to the industrials, where we have two more companies. The first one, United Technologies. Now, UTX is an interesting one because they're in the middle of a merger with Raytheon, and I believe that this could be a very good thing for UTX over the long run. And clearly, we can see that their earnings per share estimates are they have been picking up pace in the next couple of years. So I think that this is going to make a solid growth, it has the potential to make a solid growth addition to our growth portfolio. Okay, next up we have Boeing. Now, Boeing is an interesting one, and I've gone back and forth on this one. Now, this is a chart of Boeing's earnings per share going back the past few years. And as we can see, for 2019, Boeing's EPS took a nosedive. Now, this is an estimate because right now, the first and second quarter for Boeing are already in, but the third and fourth quarters are just estimates, so we're making the whole thing an estimate. But either way, in Q2, Boeing took a big loss after all the issues that they've run into with their planes and with many of the things that I'm sure we all know about that have happened recently. But that dragged down their 2019 estimates. But when we add 2020, well, analyst estimates have them growing almost as if this didn't happen. And I would expect solid growth after 2020 for at least a few more years, which is why I think it would be smart to add Boeing to our growth portfolio. Okay, next up we have consumer discretionary. The first stock in the consumer discretionary sector is Home Depot. Now, I've been a fan of Home Depot for a while, and I believe they've been a solid growth stock, and I expect for their growth to remain relatively strong over the next few years. So once again, I think that this is a nice addition to a growth portfolio in general. Okay, next we have Nike. Now, I actually think that Nike's done quite well in the past few years, and I expect them to do well in the next few years as they try to revitalize their company. Now, the trade tensions have weighed a bit on Nike, and even though that most of their products are made in Vietnam, I think it's about 20%, 25% is made in China, but that may be behind us now as a deal looks like it could be getting worked out. Either way, I would expect for Nike's earnings per share to continue to grow over the next couple of years, which could be a good thing for Nike stock and ultimately our growth portfolio. Okay, next up we have Disney, which is our only communication services company. Now, as we can see on the earnings per share chart, growth has somewhat stalled out, making this a somewhat counterintuitive pick for a growth portfolio. But I think that the stall has happened mostly because they've had to expend an excessive amount in their direct-to-consumer platforms recently. Plus, they've had a rough start to integrating the Fox assets that they bought into their business. But I expect this to be sorted out over the next year or two, and then their somewhat sluggish growth should resume after that. I believe over the long run, Disney should do quite well, their earnings per share should do quite well, and ultimately their stock and our growth portfolio because of it. Okay, so that wraps up all the companies from the Dow that I thought were a good addition to the growth portfolio at this time. Now, there are a few other companies that could make interesting additions to this. A company like Tesla, as an example. I think we all know that they've had fantastic growth, but they're not in the Dow, so I couldn't include it. I mentioned Facebook or Google. Those are companies that would definitely belong in a growth portfolio, but not so much because they're not in the Dow for our case. Now, I could easily make a case for a company like Verizon and AT&T. Verizon's in the Dow, AT&T isn't. That one, I was borderline adding that to this, but I expect there to be a lot of outlay of capital, sort of like Disney was a few years ago. I expect Verizon to be having to do that for the next couple of years as they expand into 5G. So where I think that they will grow in the long run over the next decade or so, I believe that the companies here are more likely to grow sooner rather than later. So that's our growth portfolio. Now, my question to you is, are there any Dow 30 companies that you think belong on this list that I shouldn't? Would you have taken any off? I know that there's tons of companies from, let's say, the S&P 500 that should make a growth portfolio. But since this was part of our Dow series, I tried to limit it to those. There's also a few growth ETFs that could do quite well. Please let me know what you think in the comments below. Any companies that you would add or take away, put those in the comments. If you haven't done so yet, please hit the thumbs up button. It really helps the channel and the video. And if you haven't done so yet, hit the subscribe button, hit the bell icon. Thanks so much for sticking with me all the way into the video, and I'll see you in the next video. Thanks.